Hello traders, and welcome to the StockGoodies Chart School. First, let's go ahead and load up the Bollinger Bands on this daily chart for MDXG. What you'll do is you go down here to the Overlays section, click on Bollinger Bands. The standard setting is 20,2, and that should be maintained for this particular indicator. Go ahead and click Update, and you will see that Bollinger Bands are comprised of an upper line, a middle line, and a lower line. Now it's based on the 20 simple moving average, which is this dotted line right here. And the upper Bollinger Band is 2 deviations plus, and the lower Bollinger Bands is 2 deviations to the minus. Now, one great thing about Bollinger Bands is they can warn you when you're in a period of very little volatility, the Bollinger Bands will pinch together. So when you hear a trader talking about Bollies are pinching, that's a good thing. It never determines which way it will move next, but what it's saying is it's in a long period of consolidation, and a big move is about to happen in either direction. Okay, so the volume came in, it was buy volume, and the stock price broke above the upper Bollinger Band and then pulled back to it and made it a level of support. Then it, just like moving averages, because it is a 20 simple moving average. Okay, then it took off too far too fast, it pulled back, and then entered another period of not much volatility, and the upper and lower Bollinger Bands pinched again in this area. Again, it was more buy volume during this period as it took off. Okay, then you had a couple of warning signals. It was a little too far too fast, so it pulled back and again found support at the 20 moving average. Bigger volume came in, and it broke out into blue sky territory above this resistance on good volume, hit the upper Bollinger Band, pulled back to the middle Bollinger Band, or the 20 simple moving average, and held it as support. Even bigger volume came in, and it broke out again into blue sky territory above resistance. The Bollinger Bands were pinching, so you can expect to see some volatility, some increased volatility here. Okay, so that's when you hear a trader talking about the pinching of the Bollinger Bands, look out for a big move to happen. If it moves to the upside, it could be a nice trade. Okay, same thing here, Bollinger Bands pinching. Volume comes in, it moves to the upside. Same thing here, Bollinger Bands are pinching together. Big volume comes up, it breaks to the outside. And it also works in reverse. You know, for when a stock gets no volatility and then it breaks to the downside, the bands will spread, the stock price will go, it'll level off, the bands will pinch again, and it'll break down again on a big move. Okay, so it works in both directions here. Bollinger Bands are one of the most popular technical analysis techniques. It was developed by John Bollinger in the 1980s, and he trademarked the term in 2011. The purpose of Bollinger Bands is to provide a relative definition of high and low prices. By definition, prices are high at the upper Bollinger Band and low at the lower Bollinger Band. So let's take a look at what that means. Prices at the upper Bollinger Band are high or overbought, and at the lower Bollinger Band are low or oversold. Another thing about Bollinger Bands is they cannot survive for very long above the upper Bollinger Band like here. This must have been an earnings on that drop there. Also like here, 2 or 3 periods above the upper Bollinger Band is very unusual. You will usually get a pullback within the first 2 or 3 days that will close it inside the upper Bollinger Band. So how do we use this for trading? You buy a stock when it's oversold at the lower Bollinger Band. If it makes it through The middle Bollinger Band, that's a bullish sign, and it will usually go up to the upper Bollinger Band where you will take profits. Then it will pull back and either find support at the middle Bollinger Band or break down through it like it did here. Okay, so it kind of found support at the middle, went up to the upper Bollinger Band, became overbought. There's the pullback to oversold conditions where this is a buy. It went directly up to the upper Bollinger Band again and pulled back to the middle Bollinger Band where it found support and took off on increasing volume. Then it entered another period of not much volatility. The Bollinger Bands pinched. Huge volume came in and it broke well above the upper Bollinger Band where it could not survive. Think of the upper Bollinger Band like the surface of the ocean. A fish jumps out of the ocean. It cannot breathe up here, so it must come back underneath the water to breathe. It found support at the middle Bollinger Band again. Pretty good volume where it broke out again to the upper. Let's take a look at the daily chart for WAFD. Now, because the middle Bollinger Band, the dotted line here, is the 20 simple moving average, it will show the trend, which is up at this point. Okay, the candlesticks are all above, closing all above the middle Bollinger Band. Right here, it starts turning down, showing the trend is going down, and the candlesticks are having a hard time getting above the middle Bollinger Band. Okay, right here it drops well below the lower Bollinger Band, which means there's going to be a bounce. And this time it only made it to the middle Bollinger Band before it found resistance. Right here it closed below this level of support and dumped. And this is the kind of setup I look for. I like to buy when a stock is totally oversold according to RSI or stochastics indicators when it's below the lower Bollinger Band, because I know it is going to bounce. How much, you don't know. You're hoping for some kind of bullish chart pattern to form right here, and it did. There is a small double bottom chart pattern with this red day closing a little bit higher than this previous red candle. When it broke above the neckline resistance right here at 1625, the volume poured in and it took off. There was no resistance right at the middle Bollinger Band, so it did end up going up and tagging the upper Bollinger Band where I would have taken profits the moment I saw these possible reversal candlesticks on a daily basis with two dojis and a cross there. Okay, so if you had bought below the lower Bollinger Band, you would have exited the trade if it had gone up a little and then dropped below this closing price right here on this first day of red. Okay, because then if it closes below that, there's a good chance it's going to drop below all support like it did here when it broke this level of support and dumped. So you're in here, you're hopeful it clears the middle, you're looking for it to tag the upper Bollinger Band to take profits. Okay, it becomes overbought at this period. Falls all the way to the lower Bollinger Band where it becomes oversold and forms the famous Bollinger double bottom. Okay, which is the second low is lower than the first low. Okay, but does not breach the lower Bollinger Band.